Good evening, everyone. Today, I just want to share with you a technical courses that I've been learning for a while now. So I said it's time to share with the people. And I'm myself a new trader, but I haven't started fully yet. But the technical analysis and fundamental analysis are the way to go in your first preparation. So I have taken a technical analysis and I just want to share with you for free without absolutely on the YouTube. Okay, cool. Before we do anything, we just go to tradingview.com, tradingview.com, and then you will what is it? Oh yeah, I did trading 2D there. Trading view 2. What am I doing? tradingview.com. Now we have to get the website that we need. This is the website that we need, trading view. So what we have to do is we will log into our email, and then we'll have a page like this. We don't need to upgrade anything or anything. We can use for free. So when it comes this way, what I want to show you today, I really like crypto because I want to go into crypto. Okay, so let me use Ethereum and USDT. And this is the channel. This is the window that we will see. This is the window that we will see in the first place. Okay, so when we are analyzing, we need to go to a day. If you want to trade, look, the trading is different. Some people they do day trade. Some people they do week trading. Some people they do like the investing. So that we don't call that one trading. We call like investing. But as a day traders, if you want to go and work and trade in the 1 day time frame, so that day has a specific times. For example, some people they day trade and in 4 hours chart, and some people they day trade in 1 hour chart, 2 hours chart, 15 minutes chart. I mean like a chart like this. So for example, if you want to trade in 4 hours like this, the chart will be different look. It will be like this. Let me minimize this guy, the chart, and make it bigger. The chart will be this different look if you are trading a day. I mean like 4 hours trade. You see, you choose here from 4 hours to all the way to 1 second chart. But 1 second it doesn't allow. I think it will allow there. So we will come to that anyways. So you just click on up here, and then you choose what you want to do. You see, 1 week, 1 month. So if you want to invest in something, you use 1 month. 1 week they call like swingy traders, and 1 day if you want to trade 1 week, you analyze for 1 day. For example, like this price now for the past, you see, every day 1 candle is created. 1 candle or bar is created 1 day. So if let me make it bigger. This is, for example, that one has been created 1 day. You see, underneath, if you could see like a 25th here, you see, if you could see like a 25th October 2022, that has been created 1, because we are in a 4 hour, every 4 hour. Because if you go, it depends on when you are here, what you choose. If I choose now 1 day, so every candle like this, red or green, or if it is tall or if it is short, it has been created 1 day. For example, like that one now, the green one, the small green one now, it's if you look underneath, it says Saturday 17 September. Well, 1 day, you see. So the next big one, the red one, it says 18. If you go to the next bar, it says 19. If you go to the next bar, the red one, that one, now it says 20, and then 20. So that means like if you choose here 1 day, you choose you choose a 1 day chart. So if you do if you choose 1 day chart to analyze, that you want to do 1 week, sorry, that you want to do 4 hours, then you have to analyze 1 day. For example, if you want to trade a specific frame like 4 hours chart, you just go ahead and see how the overall market look like on 1 day. Okay, so now, for example, I want to trade in a time frame of 4 hours, but I want to see the overall market, how it reacted. So, okay, what am I seeing in here now? What I'm seeing here now for the past 25th and 26th, which is 26 and 27, I see the price is going up. You see? So I see the price is going up. So if I come to the 4 hours chart now, I see the price, it is going up as the day trade told me. So that is what it is. So this is the specific time. If you want to trade 1 hour, I think I would choose 4 hours and then I would trade 1 hour. If you want to do trade like 15 minutes, then I would check 1 hour time frame. So you want to know like how the market is moving. For example, like now, I mean, we'll learn later on, but if I would click here and see this trend line and check the you know, like they call this one, they call like a support line, and this one they call support. This one is a support line, and this one is a resistance line. That means like the price reached up to here and it didn't break yet. It hasn't broken yet this level, and you always have to move it a bit so you could see, like, you know, like, because the price is moving up here, so you have to give it space, and you don't have to go down, like, you know, it has to be on the level. You don't have to go down and leave the bar is on the head is outside of the resistance. So it has to be labeled all the time, and this one I will do it. So what I could see from here, we would learn later on, but it is going to be sideways, or what they call like a consolidation. But this is what I see. So finally, in my 1 hour chart, I can see that every 1 hour, you know, one candle is formed. For example, that red one is from the 1600, and this one is from this 5 o'clock or 1700, just right now. So that is just a bit overview. And what are we going to do now? If I just clear this one now, that was the overview. But what I want to show you now is the pares, because everything has an introduction. So these pares, they have a big one, and then they have a weak one on the top. So this big one, that means like the price started from here, where I'm clicking, all the way to up here, to where that wick is ended, which is, it started from here, you see, 1300 or 1354 point, what is it? Yeah, 1354 and 88, and the price ended and 1389 or 1089 and 18 pence. And then another small one started from there, 83 to 88 on the top, and then it goes that way. When it's red, the price is always okay. Let me just, where the price stops, or where the price starts, and where let me introduce you where the price starts on the green candle, and where the price stops on the green candle again. If you ever see a green candle here, the price started from here, just right there where my mouse is. That's where it starts. It always started from the below, and then it goes upwards, because the green always reacts the bull market, or the bull trend. So the bull means like it's going up, the price is going up. Yeah, or buyers are in the market. A lot of buyers are in the market. Whenever you see red, that means like the price is going down. There is sellers out there. So you know, when the coin is cheap enough, we buy. Well, when the coin just goes up a bit, we sell. So if you ever see a sell, that means the price is dropping down. If you ever see green, the price is going up. So that means like the price is always up here. You know, from the lowest it was 1,352 here, and then all the way it reached to that long wick here, where it says 1,390, and then we have seen another green candles because a lot of buyers bought this. The price reached up to here, all the way up to here, which is 1,523, and then sellers came into the market and pushed the price back. Because if you ever see a red candle, the price starts from the top and then it pushes down. So now the sellers with a weak power came in with this candle, and then the price became here, and then it just went, and then the sellers and buyers, they just fighting in the middle, in the middle line right there. And the sellers got more power, and then they put the price down up here, and then they got weak, and then the price reached up to here. So they pushed the price down up to here. So what the takeaway from this video is, whenever the green, the price started here, when it's green, like buyers are in the market, there is a supply at that time, there is a demand at that time, and then the price goes all the way up here. It doesn't matter if it is just because this is what we call its body. So this candle we call, when it's fat like this, we call like the body, but this is the thin, like a candle. So that thin candle on the top, that means like the buyers are weak. Wherever you see the buyers are weak, if you see the green with the wicks, the buyers were buying. Then when they get here, they got weaker and weaker and weaker, and sellers are coming because the price, you see, the body is just diminishing. The body is disappearing. So up to here. So that means like sellers are in the market. So the buyers are weak in this case. And then you can see the next candle. About the sellers came in, and then they got weakened as well, and they just the price became up to here. So the price is opened from on the top and closes down with that particular what do we call a particular in a particular candle. And here, as we said, the price starts from here at the bottom and it closes up here. So this is 1 hour chart now. This is 1 hour chart. As you can see in here, this is 1 hour chart. So every 1 hour, it was bullish this time, but it went up here, and then when this 1 hour finished, almost finished, then sellers came to the market and they created this small candle, and this is 1 hour, 1 hour, and then the sellers got weakened, and then the sellers got more power, and then they put the price down. So when they were here, they got the price reached here, and it closed at 1,447, and then the sellers came in, and then they put the price back. So that is what we call like price action, or what we call like how the price moves in the market. And then you see, so whenever you see this is what we call like price action, and the trend is, we call this trend is uptrend, because the trend has some credentials here. Let me go here, some credential here. I mean some like what they call like a terminology. So if you ever see here this candle here, right here, that was 1 o'clock today. Do you see this is called like lower, and then if you ever see this one, so this one and this one, which one is higher? This one is higher, right? So we call higher than low, and then this one is higher than this, and we call higher than this low. So the price is building up, you see, and then this is higher than this low, so we call like higher low, higher low, higher low, and then the price was a bit down, so we call lower high. because this one was high, this one is low, and then lower, and then these guys are lower than high because this one is a bit higher, and then the price went up here, you know. So it went low, low, and higher low, and then higher low, and then higher, you know, you get the point. And here is the same. Here we had one higher here. It's a higher, and then this higher we have is higher than this high, and this one is higher than here. It doesn't matter. I mean, if it is if the body is full or not, it's higher than this, and this one is higher obviously than this high, and this even more higher than this, and then it just slope it down a bit. So this one is lower than this high, so we call lower high, and then we call here lower than this high, lower than this high, and then it just went lower than this high, lower than the high, and then the price picked it up higher than this low, higher than this low, and then higher. Then, but in general, this trend is just uptrend. And I hope this has been informative for you, and please like and share this video, and see you on the next video. Okay, I wish you all the best.